Welcome back to the 1 hour you need in the market to make you some money. Market Mastery is here with my good friend, Stock Savvy Shy. We're going to get right into it for you. We're going to talk SPY. It has been a weird and somewhat brutal red day. We're going to talk through the two options trades that you need to watch for this week so that you can make some money on the SPY. We're hitting about year and a half running of at least one winner every week. This gets you prepared for both the bullish and the bearish scenarios so that you don't ever have to wonder, what do I trade now? We map that out for you clean and clear, nice and simple to make sure you're set up for success. So let's get right into it here. We're going to pop on to, we had Tesla up. That's next. We're going to talk Tesla, Palantir, give you guys some updates after we get done cutting through this SPY chart here. So as you guys know, we are going to the 15-minute minimum we want to be looking at. We have our ranges carved out already. I love when we are trading in past range territory because it gives us an edge. We already know how it's going to trade in those ranges. So as you can see here, we touched 571 and change. We came down to 568 and we just closed right below that 568 mark, which is a pretty critical close. We saw the same thing here and then we opened up and went higher. But for right now, for those of you that are not in the Discord, I just posted my overnight options lotto that we are going to be taking into tomorrow. Those trades have crushed week in, week out. They are effectively a lottery ticket that can help you make stupid money off very little risk. So that being said, here's how we closed. Our range is very simple for tomorrow. We are right at the pivot point, 568 and change. We are going up or we're going down. So we're going to start with down. If we open up and we push and then we stop and then we close below this line, meaning a 15-minute candle has closed below this line like you're seeing right now, that would be our entry point on this trade. We are going to aim for 563. That is the bottom of this range. As you can see, SPY follows these ranges to a T. We have not yet broke down lower than 566, at least not for the last couple of weeks, but we do have a gap down opportunity dating back to the end of September that I think we very well could see hit since we are now trending below our pivot, meaning we are bearish for the short and medium term. So that being said, once we get the close right here, keep this very simple. We are going to be looking at least 565 on the strike for the downside. So that would be 565 puts 2 to 3 weeks out. I think that shooting for a, let me pull up the options chain here just to give you guys some specific dates. Tell you what I like. So if we went for, say, October 21st, that gives us 14 days. And we are looking at the 565 put. That's at about $500, so a little expensive. If you go a little bit closer to expiration, you take more risk, but you do get a bigger reward. But for the sake of argument, let's say we're going with that October 21 expiration, the 565 put. Some may ask, why don't we go for 563 since that's the bottom of the range? Well, we're going to get a greater capture on that delta at 565 as we come down to 563. So we're going to make more money in a shorter period of time rather than waiting as that option gets 563 and then betting on it going even lower. We want to play with the deck stacked in our favor, and that's how we do it. If you want to get maximum ROI, you could even go for the 568 put because that will pay you infinitely greater than because it'll already be in the money. When that delta goes up, the amount of money you make every tick down goes up with it. So that's your measure of that velocity. So that being said, we are looking at the at least 565 strike. If we get confirmation below this line, what we expect to then happen is for it to test right around 566, and we can either close it for a small profit there, or we could wait it out to 563, since it very likely may close at the bottom of that range. If we see demand eat up that sell side pressure right away, I will be closing it. If we get a 15-minute candle like this that instantly rockets back up, I will be closing this trade and taking what profit I have on the table, because I don't want to play with strong price action to the upside. Even though I don't really expect it tomorrow, it's always possible, and I'd rather you be prepared. So that is our bullish opportunity. That is number one. Our bearish opportunity, excuse me, that's number one. Bullish opportunity would be a break above 568 and then a confirmation close above 568. If we get that, here's what it would look like. This would be an example of a confirmation close above 568. Price pushed up, push back down. Either way, it closed above 568. And as you can see, it then took off and traded to the upside. We need that confirmation or these trades are irrelevant. So if we get that break up, I'm going to be going a little closer to the money on this one. I will be looking at the 569 call that is currently priced at about 600. If you go a little bit closer on this one, because I think this will be a quicker pace day trade, say October 16th, it cuts you down by $100, but nevertheless, the 569 call will put us in the money very quickly as we test 569 and change, and then eventually push up to 571. The upside trade I like because there is opportunity for continuation. We were above the pivot here, and then we came down here and we lost our trend. Remember, we want to see it above this blue line trading upwards as we head to 574 as our kind of magnet. If we don't get it, we don't get it. But either way, we will make money to the upside as we go above 568 and head to 571. We will get that little bull push up. So again, to reiterate, we had the put play to the downside, which is kind of what I'm expecting for tomorrow. 565 puts, trade him down to 563. That'll be my target to close. If we get strong bullish retracement right back up, I will close it for profit, and I will watch for a breakup over 568, and then I will take the 569 calls. And that's your two SPY options trades that put you in position to trade either range. Look at that. You're either going up, making money, or you're going down and making money. No matter what happens, you are making money. Unless it trades within a 10-cent increment, which we know is not going to happen, you will make money. If the chart continues to break up, you're in position to continue to capitalize. The downside trade offers a little bit more because I think there's potential to see maybe 550 on a really, really tough market day. So if we're at the 565 puts and this goes down to 550, you are going to make stupid money. That should be a couple 100% return on a small amount of capital. So now you guys are set up. You're put in position. If you want the live updates on these trades, again, the link's at the bottom to join the Discord. We could also put it in the chat. So I'd recommend you go. If you do not know, that is where you can get it. To take this a step back, I mean, give us some color around this, Big Daddy. What's going on here today? What are you seeing?
Yeah, so today was a rug pull type of day. All of a sudden, it's just 1% downturn in the market intraday, and I know some people are claiming it was like the Fed speaker who fueled that sell-off, but he didn't say much, in my opinion, to justify it. I think there's just no volume profile around this level that it won't take much negativity for the pullback to occur, especially in the seasonality weakness. I've been saying this for weeks where movements are wonky in September and October, and nobody can really explain why. Like at one point today, we were 1% away from all-time highs, but the VIX was at 21. That's weird. That's an absolute conflicting data points right there. If you guys don't, again, I'll reiterate, VIX is when there's volatility or fear in the market. A lot of people price buy puts on SPY that's 69 day outs, and they use the VIX as a benchmark to see how many people are doing that as protection. Typically, when the market's at an all-time high or close to it, things are rosy. We're in the clear. Like there's not much fear in the market, but the actual fear index is saying completely different. So one of the two has to kind of go back towards the mean. Either the market pulls back or the volatility or VIX pulls back. Either way, like one can't be an all-time high, the other stays elevated. Like the mean for the VIX is usually around like 13 to 15. 20, anything above 20, real fear in the market. It's hard for me to pinpoint why that is when the market's at an all-time high, except for the election. It is less than a month away. There is going to be some profit taking or take the chips off the table. Let me wait until we get through the noise of the election, the storm of the seasonality weakness. Regardless, a lot of people are up 20+% this year. First 9 months of the year, they're chilling. They're going to probably just get protective, defensive until election catalyst is behind us, and they can finally go towards like, all right, what's the next catalyst? And it's going to be rate cuts, earnings expansion via the earnings cycle, and hopefully preventing a labor market deteriorating, which again, we've had a very bullish data in the past 2 weeks. So right now it just makes me feel like it's just election noise. because the VIX at 21. And I think there's more room because even after today, we're only 3% off of all-time highs. Like, I just think that I've been reiterating for SPY the 1 point. Let me pull it up in my chart, see where I think that we're going to hit the September low before the election. I've been really adamant about that. And that's 540. I think 540 is a level that if we pull back there, I think it's okay. And that's just going to be the little correction before we have the blow off top rally at the end of the year. Like, it's going to be an amazing environment where the GDP is growing. Our growth for our country is growing. Inflation's behind us. And now we're cutting rates into the strength of the economy. That's where you want to be. And the setup for next year is glorious if we can prevent a recession. And that's why eyes are on the labor market. But in the next couple months, like, I just think there's so many bullish tailwinds entering the new year. Once we know who our president will be, I think it's going to be like a lot of trillions of dollars on the sideline will want to be part of the market entering the new year because those 5.5% risk-free income you're getting is behind us. It's going to get less and less. Like, it's going to get probably towards 3.5%, 3%, a lot quicker than a lot of people anticipate. Making 3 to 3.5% is way different than 5.5% with trillions of dollars. You're going to want a risk on appetite, and you're going to see a lot of flow going towards those really strong names and leading thematics like AI, like cloud, like maybe even quantum computing, EV, like a lot of these industries who've been on pause for years now are getting reignited, and it's a great time to be. So I think right now the pullback is healthy. Something had to give with the VIX being elevated, and I think there's more room. If not, I think you should buy SVIX then. There's like, you can either bet against the market buying puts or go long on shoring the VIX because one of those two things is going to give. And I think it's mainly going to be the market pulling back a little more. But if you disagree or if I'm wrong, look at SVIX and there's a way to capitalize on that.
Yeah, so I have the VIX pulled up next to S&P right now. Very interesting because the VIX does look like it's ready to turn up and have a little fiesta, which typically means we're going to see downside volatility in the market. You could see the parallels here. So this is sorry, let's get this more recent. So July of 2024 was pretty much the last time we saw the VIX turn up over this 20-day SMA. So let's go July 2024. Oh, it's 23, excuse me. July 24. So we got that move 564 down to 512 as the VIX was turning up. So let's just hypothetical this, right? Like, what does that look like for now? I think you said it, like 540, 550. I don't think that's crazy. And I don't think that'd be terrible. I almost welcome it.
But, I mean, it's tricky because you know who showed incredible strength all day, no weakness? It's NVIDIA. And NVIDIA is like, they're at the leading multiple like hot pockets of the market. So that, like, the clear winner of this whole rally the past year and a half, and like the symbol of what tech strength is green, but everything's pulling back. That's another conflicting data point. So I think if NVIDIA's like keeps chugging along, like, I do think the floor is incredibly high on any market pullback. I think today, if you guys notice, like SPY went down 0.9%. I think you guys all probably felt a lot more bloodier in your portfolios than that. And that's because NVIDIA elevated the indices. Like, NVIDIA was 5% up at one point today. I think settled at 3% up in green. So like, that's a heavy component of all the indices. So really under the hood, it was a lot more red than what the indices indicated. So take that as what you want. But I'm a buyer on any major dip. I don't think we're there yet. I think there's some great deals right now. I think I'm not being as aggressive as I'd want because I have a thesis. I'm sticking to it. That thesis is only going to be for another next couple of weeks. If I'm wrong, I'm just selling my hedges and puts. Again, like, also it's another caveat. Like, remember even though like market's near an all-time high, my puts and hedges, they're green. Why is that? I explained when I hedged when VIX was at $15.
Mm-hmm.
I think the VIX is going to hit a 20 handle before the election. We're at 21. So now all my options, even if the stock didn't move at all, and the market didn't move, is up 35% because the IV of those contracts is inflating the contract price. So like I'm net green still, even though the market hasn't pulled back. That's part of the thesis on like when the VIX hit a 14 or 15. I want to buy some cheap hedges because I think the
Yeah.
VIX volatility is going to increase. So that's another strategy to do.
So just to give you guys like a quick what he's talking about here, to go back to the chart. So this is phenomenal. You can see that the SPY on the right, it's only gone up since he bought puts, right? Betting on downside. Yet he's made money because the VIX has gone up. So again, there are a few things that affect. We don't go deep into the options chain, but an options contract can become more valuable even if it's going even if the stock it's following is going the opposite direction. If you know how to do some of these mechanisms. So that's a perfect opportunity because you did break out something surrounding this in your email newsletter. You need to go to his Twitter right now. You need to get in there. It'll be the smartest thing you ever signed up for. This dude dives deep. It's psychotic, but in a wonderful way. We can also drop the link in the chat, but check his link in his bio. That email breaks down stuff like this before it happens based on his plan of how he's going to trade it so that you are in the know. You're not hearing about it here after, because I guarantee you I'm sitting here saying, shit, I should have run an IV strategy and bought a bunch of puts. Why didn't I do that? Right? I didn't think of that. You thought of it, wrote about it and relative to other names, right? And how you're going to execute it. And you can have all of that and more. So again, imagine this now. He's sitting there with a large put position. So if the market goes down, he'll probably still be green, holding all the good names he still wants to hold, but making money on the downside, which then once he sells, he's got a bunch of cash to buy the good names that are beaten down a little bit at a discount, all while he sat there happy as a clam, not worrying about am I going to get destroyed? And best case scenario, stocks keep going up. He's going to make money anyway because the IV inflation is going to run up that contract value. So like it's a win-win-win. You guys got to remember when you give like a hedge fund $1, they turn it into $2.30. That doesn't make sense, right? But they're leveraging your dollar. This is the same idea put into a simpler format to where you can be doing these things. All right, boom. I love that. I'm going to showcase that. Following you guys step by step change. Good. That's the point of this stream, is to help you guys level up the mindset more than anything else. We can give you the trade alerts and all other shit, and it's great, and you'll make money, but you need to change the way you think so that you can maximize the potential on every single thing we're telling you. You know, this should be a uniform strategy we're all following, right? So beautiful. I love that. Congratulations. I'm glad you're here. Make sure you hit that link in his bio for that watch list or not the watch list, the deep dives that he sends. How many you usually send a week? I always see you send an extra, but what's the minimum?
Yeah. So minimum, I send out 5 deep dives on growth companies a month in the quantum computing, AI, data, cloud, e-commerce, all those growth thematics, my favorite companies in those thematics. 5 deep dives a month, 1,000+ words. During earnings season, I will also provide of those high quality companies in those thematics. I will be providing earning minutes that night of their earnings release. So you know if this dip is buyable, if this rip is sellable, if the commentary on what the management said on the calls is actual reality or is it la la land. Like you'll know all that information before open of the following day. Highly valuable. I also have the newsletter that gets sent out Wednesday nights, is a deep dives, and then earnings minutes is clearly depending on what the earnings is. Monday nights, which is tonight's, I give a voiceover of what to expect for the week, what happened last week, what's the market kind of setting up, what am I feeling on anticipate pullback, what levels, what strategy I'm implementing. A lot of like 10,000 foot view of what's happened in the market and provides you enough information or guidance to see how the market reacts the following week. So you know exactly what's happening. Where I won't give out today's content, but I did comment today when I sent it out yesterday for the edit. I think the election noise is going to start hitting the market. We're less than 1 month away. I feel like it has to hit the market. And today we kind of saw that pullback, the VIX being elevated. Like that's the kind of information that I provide the reason on why that is. But yeah, again, it's really interesting content that helps you make your decisions. Again, Austin and I, we're not trying to create this environment where we say buy this and you do that. We're trying to provide our perspective on what's happening in the market, why we are bullish on certain themes and stocks, so you can like obtain that knowledge to create your own conclusion. We're honestly more tools to be part of your toolkit. It's up to you to figure out what to actually build. We're not going to try get all the material and build it for you. We're trying to help you guys so you guys can become part of this game with us rather than a student teacher. Like, we want to be peers with you guys. So that's the whole point of this whole content that we're trying to share with you guys.
Level up the team, baby. It's game
Mhm.
time. So let's get rid of these two charts. Let's talk one, because there's one name in particular that is coming up on a very big event, and I am very interested to see how we react to it. You've got Teslonius Jackson. 10-10 event is upon us. It is 3 days away. Unbelievable to think that it's coming up. I mean, so we did watch this happen before, wherein they bumped it a little bit, but we're here now. And I think that this is going to be really interesting to see how it's so interesting to me to see even a little bit of sell off. To me, that just like, I don't know, man, that just screams that there's upside coming personally, but that's just a supposition or intuition, if you will. Anytime we see this kind of bullshit, just like soft weakness with a little bit of volume, it makes me think like, they want me scared for this event.
I mean, again, Tesla is a story stock. The reason it's ran up is because of like people have no idea what to expect at 10-10, and people aren't. If you're bullish on Tesla, you're bullish on the AI robotics Tesla, not the EV Tesla. So that's not being reflected in the fundamentals. So it doesn't take much to pull back the stock if there's any kind of buyer exhaustion or anything that's happening in thematic or EV or rates. Like, it doesn't take much to pull back because there's fundamentals is what keeps it stocks elevated. So if there's no fundamentals to back it up, it moves a ton. So this Thursday, like, Tesla has been notorious for the sell the news events on these kind of catalysts, but the odds are increasing that this isn't like a previous event. Calling it We Robot, I think, revealed their hand of something that's going to be purely FSD, automation, and Optimus. Like, it's not going to be like fluff language. Like, that's what the hope is, and the stock ran up a ton. Now people are getting closer to the date. What's going to happen? They're getting cautious. They're like market's pulling back. The stock has been up 40-50% the past couple of months. Like, it's usually sell the news event. I'm scarred. I'm going to take my cash and wait to see if it's going to be real news or fake news. And that's what's happening in the past like couple of days.
Yeah. So I would love to know. You could just hit the chat, leave a comment. How many people here are holding Tesla right now? I would just be very interested to know how much exposure we got here, because that's part of it. What helps us do this for you is like, if we know what names you guys are really in and following, it gives us more incentive to like go and analyze. I don't want you to get bent over, because this Tesla trade has been there. For those of you that are in the Discord, we've traded this a billion times. I mean, this range is golden. We trade it up, it hits, gets rejected. We trade it down, it hits. Then we break out again. We trade it up. It hits. Tesla has offered the same trade to me 1, 2, 3, 4, 5, 6, 7, 8, 9 times since June of 2023. This is a multi-bagger move on the options chain, mind you. So if you traded this with a month or two out, you were getting a multi-bagger return, a couple 100%, guys. So the goal here is for you guys to, again, shift the mindset to start to see, oh my God, I can hold this name that I really like, but I can also focus on it to make a ton of money on the interim that could effectively pay you free. It's free stock. That's how I look at it. Anytime I make money trading Tesla, I look at that as putting more Tesla in the bag for later, right? That I put away for the long haul. Looks like we've got a few people here. How many are holding Tesla? Drop a comment. I would love to know just how many have a Tesla position, how many Tesla holders we got here. I'm assuming quite a few. We got like 2,300 people watching this, so I really hope that there's more than just 4 or 5 here that are holding Tesla. I would love to see how many people are holding. But again, the 10-10 event is, to support what Shai said. I feel like that is the move. Tesla, like this August to September run, that's by the rumor. And now that we're this close to the 10-10 event, we're kind of hitting that sell the news period right now. So the critical hold we needed to see was over 245. We didn't get it. It got rejected. So Mac, great question. Yes, we do. Yes, we do. And if you sign up, like I was saying in Shai's bio, grab that link. You'll get those emails. There will be other links in there for you to check out the Discord and all these other things. Just get in there first, man, because that's you need to understand the fundamental basis of this stuff. Once you get that, then it's like, all right, here's how we take advantage of it by leveraging options. That's part two. But that's a great question, and absolutely. I see Frank here. Frank said, I already sold my calls, no longs on Tesla. So Frank washed out. He's done. He's not taking that risk. I respect it. I respect it. Tammy's got some Tesla. We got Maru Stonks. I'm in. Rick, Big Rick, Holden, same. Id, Holden, me. Farouk, no Tesla. That surprises me. I guess you're Mr. Day Trade now. So Nicholas Higgins Holdings. We got a lot of people holding. This is good. So it asked, do you think after 1010 will affect the market? I mean, that's what he's saying. Absolutely. So what you see right here, I think, is the buy the rumor of 1010. And what you're seeing right now is the beginning of sell the news of 1010. So what that means is you buy in anticipation, and most likely people sell into the reality, right? Because the hype will often outweigh the actual results. You got something, Shai, you're about to say?
Yeah, bring up Bayern Munich's comment. I might pick up a Tesla call tomorrow.
Farouk?
That's Farouk. All right.
So
So
to roast him?
no, the calls on Tesla are elevated right now. That's being factored in the 1010 event. Like it's being priced more expensive than what it usually is, which means it's gonna be a lot harder to make money on options because the volatility associated with those options are elevated than more normal. It's very similar to earnings, where if you own an option ahead of an earnings print, you're more likely to lose than gain because the IV is highly spiked ahead of a major catalyst event like the earnings. 1010 is a major catalyst driven event for the stock. So be cautious on front running like an option call for like this Tesla catalyst event unless you are confident that it's going to be a game changing or thesis defining type of event. More again, odds are, I hope I'm wrong. Odds are there was going to be not as much clarity as we'd hope to get bullish on the name. I think they're still chugging along. There's gonna be a lot of hype story about like the progress they're gonna make on the robotaxi, transportation as a service, all that. But that's not gonna be good enough anymore for the market to take this at 300. They need clear timelines, what the exact vision is of their transportation as a service, and also like the dollar price on what they're expecting. I mean, the quantity of what they're expecting from the $25,000 vehicle. Like there needs to be details. If there isn't, and there's fluff, unfortunately, there's probably going to be a sell-off. And it's not going to be that drastic of a sell-off, but it's going to be an IV crusher in your option chain. And it's probably down like 3 or 4% in comments. Not too much, in my opinion.
So you guys can see this right here, right? You can see this options chain.
Yeah.
This is the Tesla options chain. So this is for the 18th, right? Which is the strike you're going to trade unless you are really just willing to risk it and trade the 11th, which you got to keep in mind. This is where they're going to make. This is where premium sellers are going to make an absolute killing. So your implied volatility is at 91%. You typically want to look for an implied volatility of 40% or less when buying options to really make money. So, for instance, as Shai showed you, even though he was the trade was going the wrong direction, he was still making money because this was going up. So this will increase as this goes up. The cost of that option, so the total price goes up. If this goes down, even if the trade is going the direction you want it to, the value of your option is going to go down. So you are literally running uphill. You might get to the top of the hill, but I wouldn't bet on it because at the end of the day, it's called IV deflation. So after an event like this or, earnings, something like that, that IV will just go and that contract will all of a sudden be worth half of what it was, even though the stock is up a little bit. And people go, what the hell? It's IV deflation. So you don't want to be looking for that. So like we can look at further out expirations past that time and see what the IV is. I imagine it's not nearly, still a little inflated, but 57%. And then if you go further out to like 2025, right, they don't even have that strike, 57. So it looks like that's about standard. This 56, 57%.
But even then, 91% is nearly double. So you're
Yeah,
expecting
exactly.
nearly 2x of what the normal volatility is. So it's priced in.
Yep. All right. So we'll go back to get the chart up there for you. But that's what we're looking at overall. Keep that in mind and always keep that at the forefront of your vision, because trading options, if you don't know these things, I would definitely not do it. Again, we got tons of free classes. Get in the Discord. Just get in there and start learning, or come to the stream. Friday stream that Shai and I do in the premium section. It goes into depth with some option stuff. I think would be a lot of value to you. But we also have coaches that teach it specifically. So get on in there and get it. So Tesla, again, buy the rumor, sell the news. I'm not taking any risk on the options chain. It's way too expensive to play around with. If these contracts were trading at 100, 150, sure, I'd go for it, right? Based on the size, what you just saw my account. So, so on that account, it's 180 grand. I'm willing to risk $100. Who cares? I'm not willing to risk 500, 600 on one options contract, because those little stupid plays, little losses that I used to do when I first started, you do a couple of those a month, you're talking 2,000-3,000 in the hole. You don't want that. I'd rather have that $2,000 in my pocket. I'd rather spend it on me and some me time. But yeah, don't do it. Oh, Frank, this is going to be a quick aside here while we still got you, because I know this is one from your newsletter that you've been following closely. You might be getting some good buying opportunity here. This price action is nonsense. I want to say that, because I'll say this and shut up and you can talk fundamentals. But like, after seeing that kind of buying, this is just kind of silly right now. But nevertheless, I would say that you're still in a phenomenal position to, like, for me, I would watch for dips to accumulate that trend right there. And then my kind of like second backstop, already have it, is $7.20. Like, every time it hits 720, you either can stop out and wash out of the position, or you can be right at the bottom, scoop to the top side. So looks like they're already making some money with you, my friend. Goes to show. Takes to play.
I mean, small caps aren't even running yet, and this name is like holding up strength. That's like the bullish thing, where there's so many great opportunities and like these secular growth themes in the small cap world that really hasn't moved due to higher for long interest rates, that I think that long base they're like forming for years, and it's holding up and it's about to take off, because these kind of small caps are not pre-revenue but pre-profitability stocks. They're being valued based on TAM, quality of technology, partnership deals, all that stuff, rather than like what's your net income, what's your free cash flow. Like, IonQ will not be making any profitability for the next 5 years, nor do you want it to be. Guess what? OpenAI, did you guys just see their fundamentals? They're being valued at 150 bill. They're making 3.7 revenue. They're losing 5 billion a year. When you're at these early secular growth themes like AI, quantum computing, the focus isn't like, oh, how are we going to grow enough to also be profitable? It's taking as much market share as possible, being as disruptive as possible. That's all you can ask for
Are you
these
talking
kind of
about
companies.
C3 AI?
No, I'm talking about ChatGPT, OpenAI. It's not. It's private.
Okay.
Yeah, so like they're losing 5 billion a year. Like, they don't care about profitability, but they're being valued at 150 bill, 160 bill. That's why profitability for like an IonQ doesn't matter, because quantum computing is the next frontier after AI. Nobody knows when the iPhone moment will occur in that thematic, but eventually it will. So again, you guys know my motto: I'd rather be first mover than play catch up. I know the moment will happen for IonQ. You're seeing on the partnerships. You're seeing Air Force 3 straight years double their contract, start from 12 to 25 a year to now. This 2 weeks ago, it was 55 million a year. Read the room. If the Air Force is like actually validating their technology and they're doubling up, increasing it, they're seeing an application for it, and they're just like showing you what's going to occur. So I think once the rate cut cycle has begun, which it did, and it's going to aggressively start cutting more rates, these kind of stocks who have incredible technology that aren't profitable, that didn't used to catch a bid, will catch major bids. And you're seeing that right now in this name. Like, there's no right now. IonQ said that their TAM is going to be around 850 billion in, again, 15 years. 15 years is no any time soon. I get that. And it's very SPAC behavior to predict the market in 15 years. I hate that about it. But at the end of the day, They're still like what, $2 billion company, and they're one of the first movers in this space. It's very similar to Rocket Lab, first mover in the space economy. Like it's very similar type of behavior, and you're seeing like SPAC price is $10 for IonQ. A lot of
Yeah.
these SPACs traded 90% lower to $1. Where's IonQ? Are they?
Trading honestly not far off IPO. Like the fact that it's held so well, like this was the difficulty, right? But it built a hell of a base. Like you didn't get much volume, but you saw a few big boys layer in here. And then right when the volume started picking up back in like March, this thing really boomed, and they really built in a lot of volume shelf right around $7-8. So this is the accumulation layer. Just for those of you that don't understand how institutions work, they cannot buy $100 million worth of shares at one time, right? It would go crazy. They don't want to do that. They don't want to they don't want to disrupt the natural flow of things and disrupt the stock price. So what do? They buy 50,000, 100,000, 200,000, 70,000, 50,000. And you can already tell they're doing that between $7 and $10. So why wouldn't you also be taking advantage of, well, shit, they're looking at a 10-year growth rate of, ridiculous CAGR. If this does hit, they're looking at like a 10x on their return. That's what they're looking for.
Yeah.
Follow the money, baby. I want to bring one up because Frank brought one up. LNZA, I've never even heard of it, but he's, I don't know. He's selling me on it because he's saying it's the most under the radar play. So now I'm interested. I got to know, what is it? You know this one, Lanzatech?
I'm bringing you on it. Synthetic biology. What industry is it in?
It's either a banger or total bullshit. Just looking at this chart, like this is either total bullshit or an absolute banger. So either or. There's no in between.
Let's see what's wrong with it. Again, this is how I go. Like I first hear about a company, I always go, what's wrong with it? I always go for the negative then positive. That's just how my analysis works with companies I've never heard of. Like knowing like what's the bearish of people saying, or like what's the bearish argument, and seeing if I can go from bearish to neutral. And if I can't get to neutral, I stop digging in. Reading on it right now a bit. Yeah, I gotta look into it. I've never heard of it. It's just, let me see the fundamentals. I was looking on their website. That's why. LNZA.
Yeah, this chart is interesting. I'm assuming they were probably OTC because just based on how it traded, I would assume that this was OTC for a while, and then boomed, and then continued to be OTC. No name IPO, brought in liquidity, took a dump, and if they uplisted, which I'm assuming that's what they did, and now they're trying to find their base.
My first caution already is 75 million in cash. They're burning 73 a year.
Oof, no good.
So that's like, it's gonna be a dilution machine for years. Like IonQ has a 4-year cash runway. Like I have to double. I'm doing back to the active math, but this has 1 year. My rule is typically if it's less than 18 months, it's gonna have to be real bullish on the technology to be like going long in the name, because they're gonna have to dilute sometime, multiple times, to be honest, if there's no profitability guidance. So that's my 2 cents on that.
Give you a fat bag of poo-poo is what that means. That means you're going to get a nice little reverse split, and you're going to get a 1 for 10, and all of a sudden your position's down 99%, and you're like, man, how did this happen? And then social media start talking about it, and then all of a sudden it'll be a hot runner of the day, and then you buy some more, and then you realize it has to go up 1,000% for you to make any money, to break even, which is terrible. LNZA says licensing and engineering backlog is huge. I agree. It's why the price is low. Look into it a bit more. All right. Well, food for thought. Now on to the next. Snowflake.
Did you guys see that action today on Snowflake? I don't know what it ended out with, but there was some weird, like it went green, like real quick, like 1 or 2% today.
It's been a few days of this, to be honest, that I'm like, look at these little candies. Like you got some big buys, more big buys, super big buys. Even this market open, that's a big buy. Really big buys all day, and then even into end of day, a little bit smaller big buy. So there's a lot of big boys here. Like if you zoom out even more, you can see like after this brutal sell-off, like The big boys have just kept going. Like demand is in control in that sense. Like it's more visible than I would say sell side. So for me, that's one of the first things I was looking at when we started putting together that options trade that we posted in the Discord. I think we mapped it out. What, last Friday we opened it up.
Mm-hmm.
It's down like 2%, not a big deal. I'd love to get an opportunity to add more on, down at 108, give or take. August, immediate rebound, 136, sold off, but we're really basing here, which is why if you guys look on a whole, right, we find flat price action and all of a sudden the overall liquidity increases. Again, that's how you know that a buy program is in effect. A large scale institution is more than likely accumulating this. Notice how tightly it trades, like literally 114 to 110. They have algos, machines running on this. And I don't know how they get away with it because it's 100% manipulating the market. They're just manipulating the market to go up in $2 to $3 increments, and they're just buy, sell, buy, sell, buy, sell to make small money, but also to build into a position. They have to create the liquidity so that they can get it at the price they want. And they are more incentivized to do so if they feel as if a stock is unfairly undervalued, because then they know that the likelihood of, like, say, retail getting involved is higher. So they need to build the position quicker. That's why you'll see like some of these biotechs that go from $2 to 100 that you never ever heard of. They keep that shit silent because they know what kind of tech is underlying it or what kind of product they have in the wings. So they keep it silent and don't talk about it until it's time to go to Boomtown to create enough liquidity to get the run. So there's a lot of, we don't need to go too into that, but there's a lot of dynamics to think about. Rocket Game says, bro, I'm going March 2025, looking at 100 strike, 2026, just to exercise later. I would just buy the shares if that's the case. Like the time to exercise is like just buy the shares. You know what I'm saying? Personally, so no point in going through all that. That's just me. But I will say that I don't mind a deeper in the money strike, because remember we said about that delta, as the price goes up and you're in the money, that delta just keeps spinning. So for those of you that saw like my Nvidia trade that ran like 2,000%, right? Turned a couple grand into 100 grand because it was $150 strike or $250 strike before it went to $1,000. So look at it as I had a $25 Nvidia call as Nvidia went to $100. It tripled every 5 minutes, basically. You can get the same kind of appreciation here. So we have 3 core levels for snow we need to watch: 126, 145, 163. There's a reason 163 is green, because that is Boomtown. Once we hit 163 and we can trade above with confirmation, that is when we have upside incoming. We mapped out these ranges. The last time we were trading down to 109, we moved 87% in 70 days. That's huge. Are we expecting that? No, but it's possible. Last time we traded from 148, 65% over 100 days. This is how we calculate our options trade. Again, break it down in the Discord. Join it if you don't have access. Get in there. It's free. So you can learn stuff like this. So basically what we want to see here is that we want to see it hold above 127. We want to see it just climb the stairs, right? We want to see it hold above 127, trade a little bit, then 145, trade a little bit, and then we want to see 165. That's when we're going to Boomtown. And if this business is as real as they've made it seem, we're going to $200 plus. So this is a, like, I think 8 to 10% in my like 401k long-term portfolio. I've actually got a decent sized position. Maybe it's a little less, 6%, but
I'm adamant this will be a 150 in the next 6 months. Like that, I'm like very adamant about that. Again, I think the worst case risk, $90. I think best case it's 150 by next 6 months. But if it's hits 150, that means its thesis changing for what people are pricing the stock, and it's not going to stop at 150. It's going to continue. Right now, when you try to catch a falling knife, the issue with that is like you have to make sure the narrative changes. The narrative has not changed on Snowflake in over a year because they have no revenue recognition from Gen AI. The only way it gets to 150 is there's proof of they will be the data platform of enterprise AI. And the only way to get there is an earnings proof that there's revenue coming through for Gen AI and significance. So again, like it's a risk. It's a top 5 position for me. The rest of my top 5 is, I mean, this is the only one that hasn't worked yet. My top Palantir is my top dog, up 200%. CrowdStrike's my second, up 121. Tesla, I'm up 50%. TMDX, I'm up 148%. Then there's Snowflake. They're the trouble child in my top 5, starting 5. So if I am wrong still, it's okay. 80% success rate. Give me that every single day. The issue is opportunity cost. Want to cut it off. I told you everyone, like, if I don't see any improvement this time next year, like Q2 2025 earnings, I'm cutting it loose. Doesn't matter how much evidence I see personally. There's only so much of how long of a leash I could have for management. But I really do anticipate Q4 of this year's earnings, you're going to see major Gen AI proof, and it's going to take off. But I think this upcoming quarter, you might see signs of it, like a little sprinkle to get people excited to go to that 140, 150 level. But the following earnings is when, holy moly, this is real, and it's just going to take off. Very similar fashion. You saw Palantir consolidating in the low 20s, got to 28 or like whatever the price was before the last earnings, and then just took off. It takes back-to-back earnings of proof of a major thematic validation, like what Palantir did. Snowflake's going to experience the same thing at Q4 earnings of this year, which will be when they report in February or March of 2025. So that's my thesis. You guys are aware. I could be wrong. If I am, this is just one of the 5 names I got wrong. The other four of the next 5 is winners. I'm okay with that. And guess what? If I'm wrong, I all of a sudden have a 10% cash position, and I can add to my high conviction names. Like, that's how it goes. Like, don't get too emotional. If I'm wrong in thesis, know how to cut short. And that's when you got to know when, because if you hold a name for like years and years and years, you miss out on some pretty insane opportunities, and you're just going to be frustrated yourself that I still own PayPal from 8 years ago, or Snapchat from 10 years ago. And like, I just never knew when to cut short. And guess what? If you own Snapchat, you missed out on Meta, you missed out on Google, you missed out on all these other names you could probably participate in the same thematic of social media and ads. You could have just bought Meta and Google if you cut Snapchat short. That's a caution of holding a name too long.
Yeah, I mean, even look, if you didn't get a bad entry, you bought $12 back in 2017, you've done nothing. I mean, that's the thing, guys. It's all about where can my money be parked with the best chance for upside, and also the option for liquidity should I want to leave the party, right? You want to send your money to the best schools. Look at this like a school, right? I love your money. Treat your money well. Your money is like your child. If you treat your child well, your child will blossom and grow. And then when you're old, it'll take care of you. Your money is the same. Put it into a nice school, drive it in a nice car, make it a nice lunch. And then when you're old, it'll make a ton of money, babies, that you can then spend on whatever you want to do. When you put your money into dog shit, terrible tickers, just terrible. Like, God forbid. I mean, I doubt there's many of them on this audience, but God forbid you put your money into something like AMC. Just take a little peeky poo here, right? Like, you can believe all you want. I'm not saying hedge funds suck. I get it. Agreed, right? No one's denying that. But killing my money for the namesake of another is not something I have interest in doing. So look at this AMC chart. This is what you're working with. We traded the hell out of this and made a killing, right? This was a great trade. It was not a long hold. There is no belief to be had. There's no point. That CEO took a few $100 million paychecks off your back. No one has a vested interest in keeping your money safe, fat, and happy other than you. Period. That's why we're focused on teaching you the mindset so that you can become the parent your money deserves, which is an attentive and loving parent that sends it only to the best schools so that you can get the best appreciation possible and have the most money when it's all said and done. If you work a 9-to-5 job, good. Your money can be working for you right here and right now, even while you're at work. It's still coming up in 5 o'clock. So when you get off, you're looking at your portfolio and you're saying, wow, I made, what did I make today? Was it up, right? It's up 1.64%, $3,000. Cool. Thanks, money. Love you, money. Thanks for taking care of me today. So let's say I had a tough day at work. You come home and see that beautiful little portfolio. It's so happy to see you and hug you and show you all the money it's made for the day. That's what you need to be focused on. The right names at the right time, the Palantirs of the world. This has been a banger, right? We bought it here, $7.59. Here's where we're at now, 38.92. And we give obviously our whole targets everywhere we expect it to go. But we were talking about this back in March of 2023 before it's even popular, right? Because the good names, the good names will be found by people like myself or Shy or people that obsessively research this, because I want to be first and I want to be the best and I want to make the most. So you can count on my selfishness to make me money. And if we're sharing all this information with you, that means you're making money too, baby. Take care of those money babies. That changed things for me when I started looking at my money as my child. Like this money is like my children. I need to tend to it, take care of it. And then when I think I like, oh, let's go put it in like something like AMC, it's like sending my child to a daycare where he's getting abused. Why would I do that? That doesn't make any sense. And of course my money hates me. Then my money puts me in a home. You don't want that. You don't want your kids to put you in a home, but your money should be able to afford to. And I think that's the value proposition. Pokemon, that's another great example. Millennials will relate to. Oh, man, you ain't gonna level up if you don't tend to the Pokemon. So I think that what he's saying here is spot on. Again, not to keep dropping your newsletter, dude, but even I fucking read it. And like I do my own research. Even I read it. So that kind of tells you right there. So someone mentioned, and we'll move on from this. Oh, beautiful. A new Palantir from you guys when it was $30. After that, I never stopped buying their stock. Dude, good name. So unless the story changes, you're in a great position. You get all the chart mapped out. That's where we expect it to go. I'd love to see some consolidation, and I would love to see this actually trading down at 32, 33 bucks. That would be very healthy.
Well, because that S&P inclusion volume that they set at 36 bucks, it sent such a high floor in that stock that it's going to take a lot, in my opinion, to break. I would love it for it 32. Like I'm buying more at 32. Like absolutely. And I just think 36 is such a strong floor. But you're right, like Austin, like it needs to consolidate. Like you don't want
it'd be great.
It'll
shake out all the garbage too.
Exactly. Like you don't want a bubble forming in a name like this. You just don't. And
no,
it has to report godly like numbers in the next earnings to justify the current valuation. Like you don't want it to be above 40 when they report their earnings. Like you want it to be like pull back 36, 37, and hopefully like earnings justifies this valuation a little bit more and doesn't sell off. But again, like I just don't know what it's going to take for it to take off. Like I know their TAM is like unlimited essentially, and the scalability of their model is absolutely wild. But it is trading at over 100 times next year's earnings. Like it needs fundamentals to catch up a little, or it is in danger of being in a bubble where I claim it's the next NVIDIA, but NVIDIA had their fundamentals back up that move like consistently. Like the way NVIDIA worked, their stock price was increasing, but their multiple was decreasing while their stock was increasing. Like that's like the key on sustaining longevity of a massive rally. If your price goes up, but the valuation, the multiple gets cheaper, holy moly, like that's incredible. That's not the case for Palantir. Palantir is purely a multiple expansion because the market's assigning a premium valuation in their name as an after this AI winner. So that's where things get scary, like really scary. That's what happened at Tesla at $400, where the fundamentals didn't back up the stock price and it just pulled back. I don't want that for my babe at Palantir. I don't. I want like it to be reasonable and consistent. Like it's already gone up like, what is it? It's gone up 127% this year. I don't want to like it's made a massive move. Like you don't want it all happen in 1 year and then it's just red next couple years. Like I think.
So do you guys get what he's saying? The story drives the stock higher, but the story's great. What has to happen is the underlying fundamentals of the company have to justify how high it's driven the price. It can almost a stock running too much too soon can actually punish it for years to come because there's sentiment too, right? We're people, we're humans. At the end of the day, we're looking at some of these and we start hating a stock, so we never buy it, which is stupid, but it happens. You do not want to be caught up in that cycle because then you miss out on a great opportunity just because you bought it at the wrong time. And I saw some people ask about that with Palantir. I don't know if the link's still good. Poogie, if you could give him that rest and retire link, because that's where Lee's been dropping those nuggets of gold for quite a while now. He sends 3 picks a month. It's phenomenal. He bought Meta at 100. He bought this at $6-7. It's ridiculous, dude. But yeah, to your point, I would love to see a little bit of sell-off like we trade. Because keep in mind, if it drops to 32, right? $6 a share, almost 20%. It loses 20% of its total value, which puts it at a little bit of a more reasonable place. It said, "Are you going to see the next NVIDIA?" The question I'm asking myself.
This is the next NVIDIA. Absolutely, it is. Absolutely, it is. On the application software area, 1000% it is. But it's a different business model. The cyclicality nature of NVIDIA allows it to like just their fundamentals to catch up to their stock price. Like it just pull forward demand on AI related investments. That's how it works. Palantir is a different business model. It's not as vulnerable as the cyclicality of an NVIDIA is. Like it's a lot more recurring. It's all about renewing contract rather than getting as much Palantir material as possible to do your own thing. That's what's happening in NVIDIA. All these organizations, big tech companies, it's a gold rush trying to get as much hardware from NVIDIA as possible. And because of that, a lot of pull forward demand is occurring, aka the cyclicality nature of their business. Palantir, it's not a gold rush to get as much Palantir material as possible. It's slowly but surely putting Palantir's operating system into your organization. That's not a rush. It's strategic. It's timely. You take your time because it's the operating system of your organization is essentially like our organs and our bodies. If we rush a surgery, if there's any little thing wrong with one of our organs, the whole body shuts down. That's what an operating system is for an enterprise. So you don't want to rush the Palantir white canvas approach to make it tailored for whatever you need for your organization. You're going to be level, slowly play it out. So that's why like you're seeing a multiple expansion story like Palantir and not having fundamental catch up to it yet that much. So that's why it's a different business model. Like they're trading at 36 times EV to sales. That's wild to me, but I don't like using that one metric. I like to use profitability, all that stuff. But like it is expensive, and it's as expensive of a stock in that software space has been since that bubble. And don't love that, but it's justified. It's a difference. The bubble wasn't justified. It was free money in the market. So everything was getting a bid, everything. That's not the case for Palantir. It's justified, but fundamentals are going to take time to catch up to it. It's not going to be the same thing as NVIDIA, but it will be the next NVIDIA.
100%. I think that we're already set up here. Just make sure you're paying attention, guys. The market tells you what it's going to do before it does it. You just have to be paying enough attention to take advantage of what that move is going to be. So I think moving on here, are there any other names that you wanted to run through right now?
Yeah, let me look at my model. First off, like there's two names I'm adding. Like right now, like slowly, but I'm adding. Transmedics, it's pulling back. Don't really know why. Nothing reason for the TMDX. This name is going to be a mid cap, in my opinion. Absolute mid cap. Right now, it's trading at $4 billion valuation. I think this is going to be a $15 to $20 billion valuation, a lot quicker than people anticipate. It's ran up a lot the past like 6 to 8 months. I don't know why it's selling off a bit. I know small caps are selling off, but usually this name shows somewhat of strength. But it broke some key levels for me. So that's it needed to hold 140. It broke through that. I don't think it's going to fill that gap from that April 2024 breakouts, but I'm comfortable in the fundamentals to add here. I really am. And I own 160 shares. What do I mean by adding? I'm adding 5 shares. Not significant. I'm adding a couple percentage points. Like I want to still make sure this position's 8+% in my portfolio. Top 5. It's part of my bonsai of my portfolio where
explain that so people that don't know.
Yeah, so I break up my portfolio because I own 21 names. So the way I manage it is I break it up 4 different sections. Bonsai, which is impenetrable, highly defensive moat. Like there's no competition. They create their own markets. They essentially their revenue is there's no ceiling on it because they're creating their own market. Like the potential is endless, and there's high barrier of entry, so there's no competition. So they have all the pricing power they need. All they have to focus on is fulfilling the demand of their product and services. So that's my bonsai segment. That's 5 names that I have. And when there's massive turbulence in the market, where do my eyes go? To my bonsai. Most 5 names that will be carrying my portfolio. I own 21 names in my portfolio. These 5 bonsai names are over 50% of my portfolio. I'm riding or dying with these 5 names. Palantir's included, CrowdStrike's included, Amazon's included, Transmedics is included. So those are my bonsai component, and I always like treat it as I cut a little bit, I add a little bit. Like I'm not trying to. I don't have a cap of how much I need to add. I would love it if one of my positions wasn't 20%, but if I see an opportunity in Palantir at $32, even if it's 12% of my portfolio, I will add. So I categorize my portfolio, and bonsai is that, and TMDX is part of that. Same with Amazon. So Amazon is the second name. I added on Friday. I'm probably going to add throughout the week as well. So if you want to bring up the Amazon chart, we can. But yeah, that's the bonsai component of it. Again, stupid names. I had the mini monster segment of my portfolio, I have my core,
No,
and I have my moonshots.
the bonsai makes sense, dude. A bonsai tree is something that will live
You
for, I mean,
nurture,
in
yeah, you
theory,
nurture and
hundreds
it
of
grows
years.
into,
Yeah,
yeah,
you have to constantly nurture it.
yeah,
It's a staple in your life. For those of you that have seen like the Karate Kid, right? The bonsai tree is a symbol, but also it's something that lives for a very long time if you do simple things to care for it. And I think that you should look at your portfolio in the same way that it is a living, breathing thing in which it needs to be tended to. Um, but I think TMDX very interesting. Full disclosure, like let's be real with you guys here. We've been following this in a long time. Him even longer than since we've been talking. I think you're in at 30-40 bucks.
yeah.
We broke this down at 72 as a buy. It's up 100%. So just if you hear us referencing we're up this much, blah, 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 that's why. We've been following it for quite a while. What he's saying now is that this provides an interesting opportunity to potentially add to the position, which means if he's in at 40 and he adds shares here, his cost basis is still going to be down here. So that's something to keep in mind. If you're not someone who can stomach a red portfolio day, then stuff like this and adding up here is not going to make sense, even if the trade is there and the long-term value is there. Just to preface it with that, because I don't want to set false expectations.
Yeah.
Moving on to Salamazon, Jeffrey Bezos's Playhouse. This one is interesting because our pivot's right here. This white line is like a critical line that you need to follow. I can publish this chart too on our TradingView account. I think it's just Penny Boys, I think, if you want to go check it out. So you can have these charts as they're like drawn, so you don't have to go do it all. What you get is there's the fib arcs, these weird circle things. They help you predict price as it relates to time, and then just simple trend lines and horizontal lines. You don't need to do a bunch of nonsense. But we've got Amazon right here trading at a pretty critical point right now. I mean, all roads lead to 200, but it is topping out a little bit here. It's running out of gas. Question is why? Because we're on the daily. Let's go to the weekly. This is one thing I was thinking about today. Like, why are we seeing weakness in Amazon? It doesn't make sense.
Well, they got a downgrade from Wells Fargo today.
Oh,
it was a junk notes. Long story short, like their justification is like they think it should be trading at 25 or 30 times their earnings. Like that was the reason. That's it.
And what would that put it at if it were
183? So they downgraded from overweight to neutral. So it was a nothing burger. It was the dumbest note ever. And clearly, again, this is why I don't hate analysts, but like they're sometimes like they have no soul, but no brain because they're being told to do something. I think that was one of today's no was that where some MD
right up Amazon, downgrade them to 183.
Downgrade them.
Because Jeff didn't invite me to the party last night on my seriously, keep in mind there are people with that kind of power to where if they don't like someone, they can literally instruct a multi-billion-dollar organization to act in accordance with their beliefs and do stuff like that. It's not an accusation. I have no proof. I'm just saying, keep in mind, people are people. God damn it, dude. Stocks buddy for the win, buying this at 104. What the hell? So it does have the stop calculated at 151. I would agree with that. I think if we go below this range right here, we're getting into dicey territory. But nevertheless, 230 is at least my target for the next couple of years. That's what we should see easily.
I think 250 next year. Like I'm really bullish on this name. Like I think there's a lot of margin expansion opportunities on automation for them. Reduce headcount from being forced everyone to go in the office 5 days a week. They're gonna leave, which is what they wanted. Like that's a margin expansion opportunity as well. Robotics is gonna be huge on the e-commerce side of their business, which is always low margin. The always bear argument on Amazon was it's their margins will never improve in e-commerce because they're such an ad value for consumers. Automation will solve that issue, and cloud computing is on fire right now due to AI. So like cloud computing initially got started from cloud thematic. They got a second win from AI that's just beginning. So if you saw the dominance of like cloud computing in the past 10 years due to cloud, it's gonna same stuff's gonna happen on the AI thematic. It's gonna be years and years of pure dominance. Like it's just insane the opportunity in Amazon. Like I am so bullish, and I think it's the most it's more undervalued than Meta right now on among the Max 7. Like it's such a huge opportunity, and their ad spend, ads on their Prime Video is just getting started. Like they're pulling a lot. They have a lot of levers they can pull for margin expansion and profitability. And I think this name's gonna be 250 a lot quicker than people anticipate. And I want this to be a double-digit percentage in my portfolio. And right now it's 8%. So that's why I'm slowly building it up, like around these like major pullbacks on fluff notes that were bearish.
Yeah. Yeah. So Solid Snake just said it. I don't love it as a human being, but at the end of the day, that's the reality. Like a lot of the picking and stuff like that. So if you guys have never worked in a warehouse, there's people called pickers whose whole job is to go like pull inventory and put it into production or distribution to get it shipped out, right? Like that system can get a major upgrade, and honestly, it could be done by robots. So keep in mind, all you have then is energy cost and repair and maintenance costs, which I would argue is going to be far less than the hourly wages that they've been paying, which I assume are probably $20 an hour, healthcare, the whole thing. So keep that in mind. Bullish bearish question, thoughts on Microsoft. Close below daily 200 SMA. The liquidity sweep for the rubber band. The upside, let's take a peek, baby. Wrong MST. That's not it. Yeah.
I have a hot take. I don't think we see Microsoft hitting 500 ever again. Ever.
Stop it.
I don't think so. I think they're so overvalued, and there's a lot of weird financial engineering they're doing that's insensual. What I mean by insensual, Azure's numbers are inflated due to OpenAI. OpenAI is getting their revenue from it's just there's so much mixed companies doing business with each other under the Microsoft umbrella that's making it look.
So let me ask this, because I'm sure people are asking the same thing. So what you're saying is people see the traffic number. So imagine I have a website, right? And I'm showing you, dude, we get 1 million hits a month. And you're like, wow, that's crazy. But you find out that the link I was sending out to track those hits was actually somebody else's. And I'm just getting clicks, but they're not actually going to my stuff. They're not buying my stuff.
It's
buying
just
somebody else's.
Well, it's more like you're thinking all the popularity in Penny Boy's link is from external, but you're realizing it's just all the analysts and like myself just clicking on it.
Oh, yeah. Okay, that makes more sense.
That's what's happening. So like it's legal, but it's misguided. And if you know, you know. And what Meta's doing with Llama 3.1 is redefining LLMs completely, where it's going to be open source. So all the money all the edge that OpenAI had with ChatGPT series is slowly diminishing. It's becoming more and more commodity. And a lot of the volume or flow that it originally got from that first mover advantage, it's not fading yet, but it will. And because of that, you're going to see a lot of traffic or Azure numbers not really maintain that momentum as much of a Google Cloud or AWS. And you're going to see it like lose. The narrative's going to go from the hot momentum to losing shares, even though it's still significantly stronger. You just can't go do this. Now expectations are up here to continue. It's going to slowly fade over here. If you zoom out, they're still 50% on their shit, whatever it is, but people will only focus on that 25% dip because expectations got set this high. So I just think Microsoft, it's not going to hit 400. I'm 500. I really don't think so. I think the valuation is going to start getting corrected. Their PG ratio is the highest among the Max 7 names. Ask yourself, what's the next catalyst for them? Like, what is it? It's, I don't know. Like, they don't get any AGI benefit from OpenAI. Their contract language means that they have any IP that OpenAI has from AGI, which again, you guys know what AGI is. Essentially, it's going to be the biggest thing the world's ever seen. It's personalized AI essentially that's going to be able to rationale themselves. It's like real like robots who can like be rational. It's
Like a
wild.
legitimate AI assistant.
Exactly. So like they have no take in that. Like they have no stake into that IP. So my thesis, Tin Hat, is OpenAI just hit their peak valuation right now. It will never increase again. And they won't go public because you don't go public on a down round. You just don't. They're going to stay private for a long time to the extent where LLMs will become a commodity and they won't ever get the 40x sales like they're getting right now, multiple. And they're not going to be able to find the balance of top line growth and profitability at the same time. And they're eventually going to get scooped up by Microsoft, in my opinion. But I think Microsoft, once that occurs for OpenAI, I do think Microsoft will be like kind of on pause potentially from all the momentum it's experienced from being like the first mover in this AI LLM. So that's my tin hat thesis. I could be wrong. I'm not betting on Microsoft going lower, but I am not bullish on Microsoft. There's a difference. I'm not bullish on the stock price, but I'm still bullish on the company. Incredible company. Changed enterprise, sticky in enterprise. I'm just not bullish on the stock. There's a massive difference.
So if you look at, right, it's more, I guess maybe it's a philosophical question, but like Microsoft's advantage dwindles, does it not? Like with the advent of AI and integration into like all society, it basically takes, here's what you guys need to realize. You need to be a top producer because now the top producers have the tools without capital expenditure to produce even more, which means the high efficiency people are going to just win bigger. I think the same could be said for operating systems and software. Like, I don't know. I don't see it. Like, unless they had really capitalized. And from what I've heard about Azure, it's not the best. Like AWS is smoking them. So it's like, what do they really have to put them at an advantage to grow from here? I mean,
So
unbelievable story. If you go look at it on like, shit, let's go look in the 12-month chart. Like, it's an unbelievable story. Oh, stocks, buddy, nailed this one. Let me show you this. Holy shit, dude. I need to set up a buying program that when this gets the yearly buy signal, it just buys it automatically. 26 bucks. Holy shit. Anyway, so here's the Microsoft chart, right? Dating back to 1986. The story has been told. They capitalized, right? So in reality, right, they're here. This is how much it's worth. Just look at this. Think of this like a fifth grader looking at a coloring book. If we want it to go here, then something has to happen to make it worth that. Do you think that Microsoft still has that edge to accomplish that if everyone else can now finally compete? Right here, they were competing at a time when very few knew what it was to compete upon and even had the ability, right? You look at the whole Gates Jobs thing. Now, that would never happen now. Like a lot of the things that have happened, there's a weird conversation, but we're in it, so we're going for it. A lot of the things that have happened can't happen again. Case in point, some of the like Logan Pauls, the Gary Vaynerchuk's, you won't have those anymore because they were early adopters of a platform that then pushed their narrative, right? So now when looking back, wow, 700 million on YouTube, whatever, that's not going to happen again. And the value of that it's just not there anymore. So I think when you look at names like Microsoft, the question is like, okay, they were competing at a time when no one else could compete, and they definitely won. But now with what they're doing, it's not really anything crazy, and everyone has the opportunity to compete, at least to a much greater degree than before. So they either need to totally evolve, or this value is going to stay the same or go lower, right? That's kind of the thing here.
No, you're absolutely right. And the only avenue is enhancing their existing products to have really, really great AI features to have some kind of consumption model.
But also to monetize them. And that's the second
that's
question.
What I'm saying. The consumption component is like, let's
how do
say
you do that?
Excel, you just stick in your enterprise lane, and every enterprise essentially uses Excel and Outlook, all that stuff. If you can reduce FP&A teams or forecast finance teams, and you can substitute like 30 or 40% of that headcount by creating a co-pilot within Excel. It's so hyper efficient on forecasting all the FP&A like duties. That's their next like revenue stream of like, all right, we can like charge more. Like you used to pay 120K for a manager of FP&A. use our Copilot and for this amount of cost, and you're going to save like whatever the delta is. Like that's your next layer of earnings expansion, but it's going to take time for that to happen. It's like Copilot really hasn't taken off as much as you'd think, in my opinion. Like I thought it would take off like, whoa, game changer, but it's been a lot slower than I anticipated. So I don't know. That's the question. Like,
What are the core drivers of their revenue right now? Do you know them?
I mean, their gaming is insane. Like they own Activision now.
Oh, so it's acquisition. That's the only way. It's like through stuff like acquiring into other segments.
Which they did. Like they got lucky with Activision. I'm shocked that went
Yeah.
through. Like I really, because they cornered the market. They have Xbox and Activision. That's
Yeah.
There's so many games in Activision. They own like they have a duopoly in those like gaming industry with Sony. Like it's wild that went through, but they got lucky and now they have a massive gaming mode, and they also have an incredible cybersecurity modes. Like incredible. It's just that's their next avenue. Maybe you're right. Like creating their own cybersecurity like in house, so they don't have to deal with like the issues with CrowdStrike, and that would suck for CrowdStrike, me including, because I own it. Like maybe that they go down that path.
Very interesting. Solid Snake here. This is an interesting idea. Tim Cook acquiring Unity. I would like that. So for those of you that don't know, this was one part of the reason why I'm telling you to go click the link in Shai's bio to get access to that email. This is one that we were buying. Let me see. So literally buying the bottom, the absolute bottom. This is the all-time chart. We'll go to like the weekly so you could see it. We were buying 15, 16 bucks. We're already trading up 21. We're up 20, 30%. Turnaround name. It carries a lot of risk. And so Solid Snake brings up a good point. I would love to see Apple do that. I would love that.
They never acquire external companies. Like I think Beats was the only wonkiness.
Yeah.
They don't really have a gaming or AR VR angle as much as you'd think. Like they're still trying to figure out VR. Like they're not going to acquire a company until they see demand in their hardware. I really think Unity's gonna be acquired by Meta. It's just too perfect.
There you go.
Just too perfect. So like I think Meta tried already pre-IPO for Unity. That vision from Zuck is still there for AR VR in that space.
The Zuck, dude. See, and dude, for Meta too, I think it has to be said, when you have a tenured CEO that's only 30 something years old and you can call him a tenured CEO, you got to give some value there, because look, he's navigated a complex thing. I think what he's done is equally as impressive as like a Gates or a Jobs. Like honestly, I mean, well, Steve Jobs revolutionized everything. Bill Gates sucks, but what he did is still impressive, right? And I think that the Zuck is going to end up being one of the most influential people that has ever lived, I feel like. And I also feel like he's finagled the governmental like I feel like he's done well on the politicking side, and their acquisitions have been brilliant, like grabbing WhatsApp. That was smart. Instagram, genius, right? Like I think Oculus, I don't know. I just see Meta as like a force that can't be reckoned with. Like it's almost hard to even make a comp because the variety is so great. I mean,
they're incredible. And they're a
needs
cash
to be broken
machine.
up.
Yeah,
it needs to be broken up. It's a monopoly. It's not good.
Yeah.
But yeah, the Zuck, man, can't cut the Zuck, man. They said it and they meant it. They meant it. I like him. I don't know why. He's a weird guy. I love that he's like a TikTok bro now. He's got the broccoli hair and he's got the chains and like the baggy shirts. That's like adorable to see that he's.
Someone needs to find the PR firm that helped him. 100%.
I know, or do they? Because here we are talking about him.
Yeah, true.
So you never know, dude. Can't cook the Zuck. But all right, we're pushing up on the end here. We got about 6 minutes. Let's hit it. Tickers you want to see, drop them in the chat real quick. Smash or pass. We're going to go lightning round. Drop them. Drop them. Tickers in the chat. Drop them. Fast as you can. Tammy's on it. That's LRCX. No idea. Lamb Research Corporation. Interesting. Chart actually doesn't look bad.
Love Lamb Research.
Okay, there you go. You got to smash.
It's expensive, but like it's a smash.
Smash above 73. I love it. Love it. Done. Boom. Schwa. Cools. What's up, guy? Mr. 1000% on Rocket Lab. The Sherwin-Williams. Wow, I had this one mapped out and I didn't even buy it. Why? I'm such an idiot. Um, Paint, dude. So I don't know. That's weird. Like, where's paint going to go from here?
It's a vehicle to capture the housing market. More
Okay, there
paint
you
for
have
more
it.
houses being developed. So it's just another tool for that.
So as housing transaction goes up, you could expect to see a little bump there because people are going to repaint, recoat.
100%.
I'll be
Well,
honest.
the thesis is rate cuts will increase purchases for homes, which increases more
Yeah,
paint.
transactions.
Yeah,
Yeah.
yeah.
Yeah. All right. Rocket Lab. Doing so Sherwin, while you guys are hitting it, Sherwin Williams gets a pass. I guess gets a smash. Rocket Lab, Money Machine. We're buying this at $3.60. Again, hit that link in his bio. If you want these picks before they go boom, boom, you need to have that access. We crushed this $3.60 to almost 10, almost a 3Xer. Get some. Oh, Hurricane Rebuild for Sherwin Williams. Didn't think about that. Absolutely. Smart. Rocket Lab's already got the smash, but keep in mind we got in below $4. So take it for what it's worth. This was a long-term play. It was a big risk. We were just playing around and we got lucky. Just kidding. We did the math and it made sense at $3, but we're not saying it makes sense at 10, 11, 12. SoFi, right in the middle of the range, so I wouldn't touch it. Also, they've been a dinosaur of a company that happens to be so new and innovative. Doesn't make any sense. They have failed to capitalize. I don't know if you have any secondary thoughts on that, but I'm going to give that a pass.
They have a narrative issue, and they just turned profitability last 2 quarters. They need to maintain it and increase it to be a bank. And I just don't like banks, so I'm not bullish on this name really. But technically, it looks like it's breaking out.
Celsius, Pepsi earnings week.
What a
Love it or
shit show
hate it.
Celsius is.
Yep. Broke support, walk away. This one, I think this is a runner, right? Kava Group. Oh, God. Yo, what the hell is this? What is this?
It's fair. If you actually want to know fair value in the stock, it's like 50% less than this price, like maybe even
What
more.
is
Like
this?
it's Kava. It's the food thing. Remember? It's like the Chipotle, next Chipotle.
The Greek Chipotle or something?
Greek Chipotle.
Dude, pass. Done.
Yeah.
Dumb. So
It's very
dumb.
overvalued.
It's one food brand. What kind of risk management do you have on that? None. One store gets salmonella. Bye-bye. Too much risk. NVRI. Interesting.
Never even heard of it. But
Never heard of it. But
yeah.
the chart, so that's what we're going off of here. Chart looks StocksBuddy's rating. StocksBuddy gave it a buy at $6. It's already up 50%. Looks like you should trust StocksBuddy for all your decisions. It's definitely got room to 19, but this chart's risky. I'll give it a smash over $9.41. Very low risk to take from there. So it's getting a smash from $9.41. There you go, Richmond. ASPI on the radar, asks Nick. Don't even know what this is. ASP Isotopes. That sounds like some weird shit you'd be into. Do you know anything about it, ASPI?
No, never even
Some
heard
weird off the wall thing that you just happen to research for 18 hours and find out that it's a great idea. I don't know anything about it. StocksBuddy gave it a buy though, $2.70. I like above 195. 195 is a base. 313 is a base. I'd give this a wait. Over $3, worth it. Momentum trade. Other than that, I would give it a pass. End phase. We're going to quickly try to pound out a few of these. This is the best smash pass we've done. So quick, so easy, so skillful, so smooth. No, thanks. Pass. Energy sucks. That's correct. SoFi pass. Any more? AMD, sure. And then we'll be done after that. AMD. We'll finish with GME. Get some. AMD, actually kind of like it here. It broke above, so there's my long-term pivot. This line, let me make it a little thicker for you. And let me make it a little more visible. So that's the long-term. Look at your stocks, buddy. Long-term pivot right here. Above this line, it is bullish. Below it, it is bearish. So if it breaks and holds above here, then it looks like it is right now on the daily. So take that for what it's worth. This might be a great bottom dollar entry. Hard stop below that pivot. So an easy low risk trade. GME, get some. Trading along the 20. This thing abides by the range as if it were a Bible. You could have traded this up and down. So screenshot this, or I could repost it on our trading view. No, pass. Last one. Saw your tweet about P10. I'm assuming that's you. Did somebody follow your tweet or mine?
No, I didn't see anything. I didn't write anything about P10.
Was it a break? It might have been from Lee on the breakout trades. So basically, just follow. Those are not like fundamental trades. Those are just breakout. He posts his watch list so that everybody can basically trade the breakout and make money. It looks like this is one that was probably on his list. So hit it while it's hot. Last one from Takak, GWH. No idea what this is, but ESS Tech. Ooh, this has got Lee written all over it. Bottom dollar. Bottom dollar baby here. Looks like reverse split city. Get some. Look at that. Trade candidate. Probably not something I'd hold. More dilution is always there. Yeah, you got a decent runway to maybe 830 and then $10. All right. Well, love y'all. Last one. Only last one because I've looked at it a million times. NVIDIA. This is great. So here's your trend lines. I'll post NVIDIA too. So make sure you hit the channel on TradingView. I think it's just penny boys, to be honest. But I'll post these here. I'm going to post links in the Discord too. So make sure you get in there. Analysis on this. All roads lead back to 140. That's what we're waiting to see. I love that it held up here. If it trades in this range, I'll be very happy. And it means that we are inevitably heading back to like 175 or so by March of next year. So that's the expectation. And love y'all. Stay blessed. Bye-bye.